Did you know you can buy the S&P 500 with just one share on virtually any stock brokerage? 500 of the largest publicly traded companies in the US? It's true, and you can even do that without hardly paying any extra fees. In fact, the expense ratio on doing that is 0.03%, which means for every $1,000 invested, you would pay just 30 cents annually. That's $3 annually for every $10,000 invested. I made a mistake in my recent video about VTI, the Vanguard Total Stock Market ETF, and said it was $3 annually for $1,000 invested. Go ahead and check that video out if you are interested in learning more about buying the entire stock market for added diversity. Now, before I go and get into it, you're watching Gym Class Finance, and I'm Sean. We talk about budgeting, investing, and side hustles in ways that everyone understands. So if that does sound interesting to you, please go ahead and subscribe. Did I mention it's free and would ensure that you will see all of our future videos? Now, back to buying the entire S&P 500 with just one share. The stock or ETF we are talking about today is ticker symbol VOO. That's the Vanguard S&P 500 ETF. Now, if you prefer mutual funds over ETFs, you can get this same fund as a mutual fund, and that is ticker VFIAX. With those two, you will get the same collection of stocks and dividend yield. Remember, if you want to buy a mutual fund, you can't do that on a regular stock brokerage like you can stocks or ETFs. Let me take a deeper dive into what you get when you buy VOO. As we take a look at VOO, the Vanguard S&P 500 ETF, I'm just going to go through all the basic stats on it and give a little bit of my input as well. So if you look, you can just see kind of a basic overview here. You see that there's that 0.03% expense ratio I'll get into in a little bit. And there's also that the yield that you see is 1.56%. And the NAV price is $354.08. as of 12/16/2022. Now, Vanguard likes to give a little bit of a risk-reward rating for their ETFs, and so this one comes in at a 4, just like VTI that we looked at in my previous video. Once again, I'll put a link up here. Go ahead and take a look at that if you're interested in looking at what VTI is all about. So we're going to look at the average annual return rate for VOO here shortly. Here's the year to date, 17.92%. It's down. So it's not up, it's down, which is about right for the S&P 500 as of this point. And the entire stock market's down. So we all know that as well in 2022. This stock or this ETF invests in stocks in the S&P 500 index representing 500 of the largest U.S. companies. Its goal is to closely track the index's return, which is considered a gauge of overall U.S. stock returns. And so back to the annual return rate, we looked at the year to date, which means basically from the time you start to January 1st is what that looks at, the year to date. Anytime you see YTD, just in case anyone is a little confused on that. If you look at the 1 year on VOO, it's down 9%, a little over 9%. In the last 3 years, it's averaged almost 11% at 10.86%. The 5 year, it's averaged 10.94%. And then if we continue over and we take a look at the 5 year and the 10 year, you can see that it is once again maintaining almost 11%. In the 10 year, this is really nice to see, it is up 13% annually, very impressive. And since inception, which was 2010, it is up 13.5% annually. So pretty nice returns there, pretty solid returns, and that's what you get with the S&P 500, so I'm not surprised. As I said, I did want to take a look at the expense ratio again, and we said that's 30 cents per $1,000 invested, $3 per $10,000 invested. So I'm not sure if you know a ton about expense ratios, but that is literally like probably the best you can get besides those Fidelity funds that are 0 expense ratio. I'll go over them in a future video. I've done that on the Modest Wallet YouTube channel. We've gone over that, so I'll link that above as well. But yeah, you can't really beat that. The average expense ratio of similar funds is 0.78%. All right, let's get into the portfolio composition, and you can see this ETF is made up of 503 stocks of the S&P 500. It's that index that we're looking at. And I'm not going to get too into the details, but just wanted you to see the PE ratio. And you can also see the fund total net assets down there towards the bottom. Continuing with the portfolio composition, you can see how this fund is broken up. And so let's just go through them real quickly. Communication services. Remember, this is the 11 sectors of the stock market. Communication services, 7.5% is made up. Consumer discretionary, 10.4%. Consumer staples, 7%. Energy, 5%. Financials, 11.6%. Healthcare, 15, a little over 15%. Industrials, 8.4%. Information technology, once again, not surprised by this, 26.40%. Materials, 2.7%. Real estate, 2.7%. And utilities. So pretty nicely distributed there. Obviously a little high in information technology, but that's to be expected in the S&P 500. And then if we break it down even further to look at what companies are in this fund and which are the top 10 companies that make up this fund, let's take a look at it. Obviously, this is the case for a lot of these types of stocks, but Apple and Microsoft come in as the top two. Apple representing 6.47% of the fund and Microsoft 5.5% of the fund. So those two kind of separate themselves from everybody else. Amazon at 2.5%, Google at 1.75%, Berkshire Hathaway at 1.66%, Tesla coming in there nicely, United Health Group, Johnson & Johnson to round out those top stocks that make up this fund. Now, we did already take a quick glance at the dividend yield, but just so you can kind of see how this fund pays out in regards to dividends, because it's going to get those that income from dividends, and also the stock or the ETF will then also grow, which obviously you don't actually lose money or make money until you sell the ETF, just making sure everyone understands that. But you can see it does pay a quarterly dividend, and you're looking at anywhere between $1.30 to $1. It looks like what's $1.67 that it has paid out over the last year and a half or so, maybe 2 years. And just for anyone else who doesn't know, that ex-dividend date there at the end is when you need to own the stock in order to get paid that dividend for the quarter. If you don't own the stock at that point, then you're not going to receive the dividend on that payable date. That leads me to my last question, which is, do you think VOO is at a good buying point right now, or is there still some more room for it to go down? We don't have a crystal ball, but just wanted you to kind of think about that as I've hopefully helped to explain how this fund works. Let me know your favorite ETFs to invest in the comments below. As I always say, I will do my best to respond. So thanks so much for checking out our channel, and thank you so much for hitting that like button. I know you're going to do that for me, and I'll see you in the next video.